Don Luskin, we had oil, we had gasoline, we also had basic materials. Those are kind of the old-time religion inflation plays. Now, I've got some charts. Here's a gold chart we're going to put up on the screen. It's not quite a bear market chart, but it is close to a bear market chart. It is very close to penetrating the lower part of the channel. And I've got a dollar chart. Now, one of the good surprises recently is a strong greenback. And we've got a dollar chart that shows the DXY dollar index has, in fact, moved above the channel into what could be bullish territory. So, Don, in view of today's action with the big commodity gains, how are you playing it? Are we back to the old-time inflationary religion, or is this a sell signal?
Larry, I think you've brought in these charts and you're using these sort of technical analysis terms to stay with that spirit. I think that the best way to describe what's happening with gold and the inflation plays is to say that they're in an indecision pattern. We just don't know which way they're going to go. They're still in primary bull markets, but they are also looking very toppy. But their major uptrends have really not been broken yet. They're kind of in high-level consolidations. It could go either way. The big mystery here is that all the inflation plays were surging 2 weeks ago before the announcement of the rescue package for Fannie and Freddie, when it looked like the Fed was going to have to go back in the rate-cutting business, which would have really unleashed the inflationary dogs. That would have been a problem. Then when the Treasury did the bailout instead of the Fed, all the inflation plays collapsed. But what's so amazing about it is that the Fed funds futures, the direct market for expectations about what the Fed is going to do, they've hardly changed since 2 weeks ago. We're still only expecting one lousy rate hike by the end of the year. And to me, that's a recipe for inflation. So bottom line, Larry, these charts are in an indecision pattern. My head's in an indecision pattern. I'm not sure how this is going to turn out.
I hear you, buddy, and you're not really sure on the Dennis Gartman. Dennis Gartman is going to become a seller. You're not really sure about that, are you?
I'm not really sure. I'll tell you this. I hope it's true. I'd love to see oil back at 100. I'd love to see gold back at 500. I'd like to see the inflation rate back where Ben Bernanke said he wanted it when he took office, at 2% instead of 5%. I'd like that. I'd like fried chicken to fly into my mouth, too. That's probably not going to happen. But fingers crossed.
I generally agree with what Don just said, and I
would say that I admire what Don Luskin says in terms of his honesty.
Well, I think Mr. Don has a very good point of fact that...
Step back a minute. Isn't it possible? I think it's very possible. I mean, I'm in the summer rally camp, and I'm not budging on this, but look at... Stocks are the most attractive asset class. We've seen the commodity boom. We've seen the oil boom and the gold boom. The housing story is just too frazzled yet you can't jump in there. Long-term Treasury rates, Don, are below the inflation rate, so you don't get any return there. Stocks seem to me the most attractive asset class, but I'll ask you for your view.
For the ordinary investor, stocks are absolutely the most attractive asset class. Absolutely. However, if you are one of the big boys, if you're one of the insiders, the most attractive asset class is subprime mortgages. Just ask Lone Star. Ask these guys who got $30 billion in face value of CDOs for putting up only 1.7 in risk, with another $5 billion loan from Merrill Lynch, so that if these CDOs become worthless, the most Merrill can ever claim from Lone Star is the 1.7 billion. So Merrill has given up 30 billion in upside for 1.7 billion in downside protection. Also, they can claim falsely that they've gotten this stuff off their books. That is what you call capitulation squared.
But it really
is the kind of crazy stuff that accomplishes nothing but makes you feel better. And so if you're Lone Star, you got to be buying those CDOs from those bozos at Merrill. But if you're the ordinary guy watching this show, what that tells you is that stocks just can't get any lower, because when players like Merrill do stuff that's stupid, that means we're at a bottom.
Go ahead,
that's a valid point, Don. That's a valid point, Don, but there...
So Thane did just, I think, one of the idiotic trades of all time. Those things tend to come at bottoms. Is Merrill in trouble?
Dennis...
Merrill might have some problems over the near term.
If you recall, Merrill Lynch's stock was under huge pressure the 2 trading days before this was announced.
Yeah.
And there was a rumor of a funding problem or a regulatory downgrade, a ratings downgrade, excuse me.
But isn't it funny that in response to that crisis, their reaction is, let's do the stupidest thing we can possibly do. Oh, that'll help.
Yeah.
This time we polled our Kudlow regulars to find out, will drill pass this Congress? Interestingly, here's how they answered. Out of 12 caucus members, only 1 said yes. 11 said no. Now, to see how each individual member voted and why, head over to kudlow.cnbc.com. I will say, though, that the 1 yes come from that distinguished statesman investor, Donald Luskin. Another caucus member here and now tonight, Stephen Abrams, said no. Don Luskin, you said yes. Why?
Because I think when push comes to shove, we got an election coming up, man, and these guys want to get reelected, and with the price of gasoline the way it is, there aren't enough environmentalists to outvote all the smart people who are going to say, okay, Anwar's one thing, but why can't we drill offshore? Let's just do it. And anybody who votes against that is going to get turned out of office. It's a scandal. I think that's what's going to happen.
And when Luskin, is the market headed south or north?
It is going north, Larry.
All right.